Well, let's just kick things off. Talk us through the implications of this kind of delay.
Well, I think one of them is just that, or rather it's easier to talk about what kind of calculations led to informed the delay. The first being that the East African community, in terms of the bloc, has a big agenda right before it, including consolidating the customs union, including some infrastructure that needs to be built in a common level. So given that monetary union was anticipated and some of the preliminary work has been done, I think it's prudent, as the decision has been made, to delay this until the other issues that need to be concluded are done. Because one, it would look as if we are getting ahead of ourselves if we try to complete a monetary union before a customs union is fully and completely implemented. So that's the first. I think the second is just evidence coming from Europe that perhaps it should not just be rushed, but
Indeed.
also that East Africa on its own does not have one general country that's as strong as Germany and France that will be able to pull us off a crisis if a crisis occurred that is similar to Europe. So it's just basically comparing these things and people developing perhaps cold feet, but the reason for that delay, in my view, is sound.
Indeed, looking at that delay, but let's just talk a bit on the perhaps the benefits of forming this monetary union within the East African region, or perhaps do you see some stumbling blocks?
As I mentioned before, if you ask me about the priorities of the Eastern African community in total one, I think it's still a bit small. The benefits of monetary union are not as clear to me. And of course, this is a debated question, but in my view, it is not a priority for East Africa for many reasons, among them being that for most East African countries, convertibility of currency already happens. So really, the frictions that will be immediately solved by having a monetary union and issuing a single currency are not that convincing to me, or rather the quantum would not be so much as to justify the kind of infrastructure that will have to be put in place. So obviously that's it. But the argument about having a single currency and a reduction in the frequencies, or rather the cost of conversion from one to the other, makes sense, and some of the preliminary work that had been done was there. But I thought originally that the central banks, in my view, were far more enthusiastic than the evidence that I saw would justify. Looking at Europe again, which was basically the template that was being used, it is now clear that perhaps it wasn't as it wasn't a very good idea, all factors considered, and looking at how the UK, or rather, the UK has got away with it, it's clear that you can actually have all these other matters for easing commercial operations across country without necessarily going into a monetary union. Some of the problems are necessarily political, and I think they'd be replicated in East Africa as well. So yes, it makes sense. I'm not too sure that East Africa is sufficiently consolidated for a monetary union to be the priority right now.
Indeed, there's lots of lessons to be learned from what's going on in Europe right now. Let's talk a bit on the integration process in terms of the common market and the customs union. You did touch on it a little earlier, but are there somewhat outstanding issues that you can see right now?
Oh yeah, there are, especially at the customs union. I mean, this was concluded quite a while back, and of course, so far, though, it's not been fully consolidated by virtue of the fact that they have not set up a single mechanism for sharing of revenues, because if you have a customs union and you have to collapse customs so that you have single points of entry, then of course the standards have to be the same. And I think task forces, or rather technical working committees, are already in place. They produce certain reports that are discussed, and the decisions that have to be made at the levels, at the summit, which is basically the meeting of all the presidents, will determine how far it goes. I think the other point that is relevant is a question of asymmetry. East Africa so far has 5 countries, of course, with applications from more recently Somalia and South Sudan. But the 5 main countries are Uganda, Kenya, Tanzania, Burundi, and Rwanda. And it accommodated the principle, or rather anticipated the principle, envisaged the principle of asymmetry, which means countries will come in at different levels. So sharing of revenues, I think, is one area in which a formula for the sharing of those revenues is one that is going to be, and is already contentious. I think for as long as that has not been solved, or concessions have not been made one way or the other, it's clear that there's a bottleneck that is material. Of course, they'll be overcome in my opinion, but it'll take a little more time for confidence to build for those to be overcome.